What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended on Friday, and where price is likely to head into the rest of the week. So I got the 1 hour chart pulled up. That's the first thing we're going to look at, but before we get into it, please smash a like, subscribe, share with all your friends. Check out the links in the descriptions below. You can find the links to the Rawstocks Discord, where we currently have a 30-day trial or 30-day free promo code going on. Only 10 is the promo code. There's only 7 left. That's for 30 days free of premium membership. Otherwise, everything's free on the Rawstocks Discord. You can also find the link to the Traders Helping Traders Discord, where I'm also hanging out during market hours, where the people over there continue to bring a lot of value for their premium content, including additional call-outs by Peter and the crew, lots of education, as well as some more things beyond that. So the links are in the description below. Let's go ahead and jump into the charts. We have the 1 hour pull up. It's going to be a shorter video today. I don't feel the need because we've had quite a few days off to go through all of the different time frames, and you can see some of those on my video that will release tomorrow for the general viewers and public, and that is how to set up your weekly chart headed into the week. Again, that's something that only releases for Rawstocks and Traders Helping Traders Discord members prior to the week starting. Other than that, the rest of the viewers get it the first day after market opens for the week. But we go over a lot of the different levels and stuff in that video specifically, so I'm not going to go over every single chart today. We're going to look at the 1 hour. I'm going to look at some really key things that are developing as we saw a big sell-off last week. Okay, so what we want to be watching here, and I've hand-drawn these are not drawn with an indicator because they're the ones that I think that are important. But what you want to be looking for is you want to be watching these 1 hour fair value gaps. These are bullish fair value gaps that were laid back in the middle of December. As we saw this rally up, we have never really come back down to test these or trade back into them or reprice back into fair value, right? So then, as this narrative was bullish, we did have one hour displacement candle, which got traded back through pretty quickly and got taken off the board. Okay, and then we saw additional small displacement here, which we have now since repriced back into. So if we are looking to trade lower, which is entirely possible, we might be looking to trade and reprice back into this fair value gap and potentially back into this fair value gap. Now, I don't think that's going to happen all at once. We do have delivery numbers coming out as well. So what I wanted to notice is that we also traded down into this 1 hour order block right before we took off here. We laid this order block here, or you could also look at this order block here. Either way, we traded down into these lows right here and into these blocks, and we never quite took the full low. We got pretty close, but we got to this order block and we found support and rejected on Friday. What I want to notice on the 1 hour chart is that we had displacement here off the top, right? So we delivered up to this level. We saw displacement. We saw a 1 hour change of character here where we broke a previous low. Okay, we continue to see displacement here. We get another imbalance or an inefficiency in price delivery, right, that we did trade back up to and ultimately rejected off again, taking the engineered liquidity in these lows, right? Low, 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 took all of it into order block. Okay, it doesn't mean the job is done, but it does mean that we swiped all this liquidity at all these lows on this way down. And so if we want to go deeper, there's a chance that we might need to come back for some of the liquidity and reprice back into some of this fair value before we see price continue to go lower. So that's what I'm looking for. What I'm looking for is potentially, we got delivery numbers coming out tonight, or before market opens tomorrow. That could give us a gap up or a gap down. And so let's look at both scenarios. Let's say we gap up, right, into maybe this fair value gap. Maybe we even gap above it. In that event, we're looking to target this order block here and this fair value gap here, right? And so that would be a run up. Late last week, I took 255 calls and I averaged down with 2 additional contracts. So I have 3 255 calls. The reason I took that is because we have fair value gap, right? We do have this one right here, most local, that we've traded back up into. But I do think that if we head up, we're gonna head up, towards this fair value gap, which is around 256, which would make those 255 calls go in the money. Okay, so if we gap up, or because of delivery numbers, I'd be looking for us to target order block fair value gap, right, where we might find some reaction. There probably would be either a daily gap or a fair value gap that was left here as we broke this high. So we'd be looking for it to come back down and test wherever that displacement was or that gap was, and then potentially rally higher where we could find rejection on this low in this mitigation block. That's what it would be called if we got back up there and rejected, right, from there, and then potentially repricing all the way back up into this fair value gap, right? And so it would look something like that, but not perfectly like that, but something like that if we were to do that, right? From that point, we could sell down or we could continue higher. So that's kind of a bullish scenario for delivery numbers. Now let's look at a bearish scenario. Okay, numbers come out bad. Maybe we gap below this order block and this liquidity level, right, into this fair value gap, right? Price into it, come back and retest. There will be a gap or an inefficiency in price delivery there, right? And then maybe come back down. We got lows here. We got fair value gap. We got additional lows, right? So we might price into there. We might come back down and take the liquidity all the way down at 228. Totally possible. If those numbers come out bad, we're also heading into earnings, and so we might just take all of this, take it out completely, and then at that point it would come down to earnings, whether we saw a rally up, continuation to the downside or not. Now I don't expect this move to happen. Not right now, but it certainly could. We do have the catalyst coming out that could get us going down even further. Once we break this level here, as far as liquidity goes, we got 240 and we got 228. There's not much in between here that's going to hold us up besides this just repricing into this fair value gap. But if we're on a liquidity hunt, we're taking this level and then we're dropping all the way down to this level. Okay, because this run was, just pretty parabolic over 2 days, the 13th to the 14th. So 2 days worth of trading. We hit that low, we just ran it, right? Came back down and ran it. And so there's not a lot of points. You can see here in this displacement candle, we took all that liquidity, all that engineered sell side liquidity here, all in one shot, right? Ran it up, came down over 2 days, took all of this engineered sell side liquidity here. So if we are going to head lower, right, there's not many spots that are going to stop us. We got this one here, and we got this one here, and that would be just probably, a free fall based on delivery numbers, and then just selling. And on the way down, we're going to engineer buy side liquidity, right? Just like what we saw here, which we don't have a lot of because this is a quick fall, but we have liquidity level here at 256, also where that fair value gap is. We also have engineered liquidity here at 251. So we do know, like when we do head up, we're going to take those levels, and those are our liquidity targets. Also happens to be right where fair value gaps are. So those are a couple different scenarios that we're looking at. Those are the main things I want to focus on. We can drop down into a 15-minute chart, and on the 15-minute chart, you can just see a little bit better smaller time frame fair value gaps as well if you want to put those in. I'm really just focused on the 1 hour right now because I'm looking to see if we're going to see a turnaround or not. But you could go ahead and put your additional fair value gaps in there, right, if you want to see exactly where. And if you're trading the 15-minute chart, basically you're looking to enter on a break of structure or change of character. So you could have taken this low here and seen that we displaced through that low, traded back up. You could have got a short entry right here. Or you see we had this low. We had a displacement fair value gap through that, traded down, back up into it. Could have grabbed a low there, right? Or we took this liquidity level, right? There is a fair value gap right here and right here on the 15-minute time frame. So you usually take probably the closer one. So you could have seen one right here as well. Okay, you could have taken a short entry in that as well. So if you're looking at the 15-minute for your trading, lots of different opportunities. Same thing on the way up. Right? If we develop our bias here because we had that change of character, our bias becomes bearish. And so if you're playing short-term contracts, be entering accordingly. I'm going to try to, with the new year, focus a little bit more on this specific setup of changing or having a market structure shift, and then looking for fair value gap entry, and then taking the trade accordingly as far as our scalps go. Because you can also see it if you drop into, let's take these 15-minute ones off. You can also see it if you drop into the 1-minute chart. You'll get a much better look at displacement. And you'll see a lot more peaks for our changes of character, our market structure shifts. Okay, but what you can see here is we had a low, right? We had a second low. And you're looking for displacement to occur. So there was no real valuable fair value gaps here, but we came back up, and this is probably, I think I talked about this in the other video, but there's your optimal trade entry in this move. But if you didn't catch that, or you were a little nervous to grab it so early on that day, I think this was Thursday, then you see we break this low. We have a displacement. 1 hour fair value gap. Okay, we never actually got back up to it. So you wouldn't have probably got a great entry there. Or you could have tried to grab it on this second candle where it comes back up to the fair value gap. And so that's why sometimes you do want to be also watching your other time frames, because you do have your 1 hour fair value gap that we got right back up to, but we didn't get back up to the 1 minute on that chart. Often say also start, if you're doing scalp trades, start at 5 minute and work your way down to the fair value gap. Because you can also see on the 5 minute chart, there's our fair value gap right there, right? We took this low, displacement, trade back up to the fair value gap, either in, well, that's the candle it got laid in. So right here, traded right back up to it on the 5 minute chart, and then we sold off again. Same thing here, took the low, right? We got a fair value gap, didn't quite trade back up to it. There's another fair value gap right here that we did trade back up to on the 5 minute chart. So always start with the 5 minute chart on your scalps. Right, you can see that there. Same thing here. Low here, displacement. In that case, we never actually traded back up to it. So that was the final leg of distribution on that, on this whole move. But lots of different entries that you could have grabbed on the 5 minute, on the 15 minute, on the 1 hour, all showed good entries. Hopefully you guys continue to learn these smart money concepts. I continue to try to dial it in a little bit further for you guys, so that we can have the best, most accurate, most precise trades that we can get, especially for those that are following in the premium with the Discord who are taking the call outs. I'm going to try to adjust things for 2024. So that hopefully we can have even more success than we've already been having. So hopefully this has been helpful for you guys. I'll see you guys on another episode tomorrow after market closes. Good luck on your trading and Happy New Year.